We're just going to jump right in. What in the world is going on with natural gas? Well, let's just start with the following and the obvious. The past 2 weeks, the inventory numbers that have come out, those builds, have been hellacious. There's no other way of saying it. They have been outright hellacious. We are injecting inventory into the ground at a rapid pace, which means we are not using as much natural gas as you would like to see. We are injecting a lot into the ground. We are building up massive amounts of inventory of natural gas. Because of this reason, natural gas right now is going down. Now, we said last week, and we still believe it, we do not believe that this low is not secure. We believe this low is secure. We don't think the market is going to take this out. Even with the numbers, so this August 25th low is 622. We don't believe that that's going to get taken out. We think it may get tested, potentially, and maybe there's a slight price drop below it, but we think it holds. We believe for now the market is going to be trying its hardest to hold on to this 290, 280 area. And then once winter comes, then we're looking at this, 3 spot 15, 3 spot 20 area to get taken out, and we start moving up. For now, natural gas has been moving specifically on these inventory numbers. And like we said in the beginning, the past 2 weeks, these inventory builds have been nothing more than hellacious. Therefore, there's a lot of price pressure to get natural gas down. However, like we mentioned, we're going to repeat ourselves. We don't believe that this low is going to get taken out. We believe that this is secure. We think the market will probably try and find some kind of support in this 280 to 290 area. We think it chops around for the foreseeable future. Then, once winter comes and the weather changes, our anticipation is that we start making our leg up and start moving towards this 3.5 area. We'll get to where it goes once it gets to 3.5, but for now, we think that the market is going to be very range bound, at least for the next couple of weeks. So that's natural gas and what's happening there. We're just going to say this and we're going to get it out there. We don't believe that sanctions on oil are coming. The reason being is because the world economy and the global players in politics know that the market is not able to withstand a huge price shock. A huge price shock would be Russian barrels coming off the market. You hear it in the current administration. They're always talking about how they want to get oil lower. They say over and over again, with oil prices are lower, then it's wreaking havoc for Russia, and therefore the war machine is unsustainable as prices drift lower. The entire U.S. administration is fixated on lower oil prices. They are not going to do something in the political arena that's going to deter oil from going lower. They may threaten it, they may chest thump, they may say things in the media to get things going, but they're not going to do it. Because again, they do realize, as well as other world economies or world leaders know, that there's only so much the market can withstand if Russian barrels are taken off the market. They're not going to do it. So their probable strategy is that their assumption is if they can drive the price down, that will cause the war in the Russia-Ukraine territory to slow down, because cheaper oil means that, at least in their minds, that they can't finance the war machine. You could look at it from a different vantage point of cheaper oil means their customers can buy more at a lower price and therefore stockpile more oil, so they could build up their own reserves. We do believe that for now the oil market is completely range bound. It's sitting between 62 and 64. It's going nowhere fast. Right now this market is pretty much in no man's land. So you just mark it off. Here's your 64. Here's your 62. And you can see clearly the market is just bouncing around in that range. Yes, we get out of it, to the upside, but we're pretty much living in this 62 to 64 zone, which means in reality, from a trading standpoint, there isn't a whole hell of a lot to do here. You might get some rips, but they're relatively muted. You're not really getting anything. There's better places to be. Oil right now is not the place to be. Let me repeat that, because we do focus a lot on energy and oil, but I want to make sure I'm very clear on this. For the time being, with oil being in this $62 to $64 range, we don't believe it's worth your attention. You can track it, you can watch it, but in terms of trading it, right now, you're probably not going to get paid. So it's just not worth it to be here now. Let this range of 62 to 64 get resolved. Once it's resolved, it's a whole different ballgame. But for right now, it is pretty much dead money. Where you should be is in the metal space. Let's go to the metals. Let's start with gold. We'll go silver. We'll go platinum. We'll touch a little bit on copper. For now, gold looking good. We have a daily up. There's no reason to go into any other time frame. Market is doing fine. Path of least resistance is up. We're probably going to see 38. I don't think we're going to get to 4,000. We have seen calls of 4,000. We think that that's a stretch, at least for 2025. Obviously, the market's going to do what the market's going to do. However, we don't believe that 4,000 is in the cards for now. We believe that potentially the market will tag and kiss 38 and probably back off about $100 or so, $150 or so, and then live between somewhere in the 36.5 to 3,800 range and just chop around. Sort of what we got over here in this zone. Before we broke out, we were living basically, we're basically living around over here in this zone. Let's make a rectangle. In this zone, we believe the market's going to do somewhat of this type of action in the 38 to 36.50 zone. We think it's going to do that for quite some time and wear a lot of people out. We don't think 4,000 is in the cards for 2025. Obviously, a lot of things are subject to change, but for the time being, we believe that for now, 38 to 36.50 is probably your next zone. Ideally, if you're looking to buy it, and would probably be a gift, is if the market can get down to 3,400, even 3,500, and then that's basically a retest of the breakout area. That's probably your gift in terms of buying it. It'll take a lot for it to get there, but if you're looking for a real retracement of where you could safely buy it and feel comfortable, you could buy it 34.50, 35, even 34.75. You'd be using the bottom of the range here, which would be about 32.80ish. That would be your stop, and you would expect that the market would test a breakout, hold, and bounce off of it. Okay, the market that's really been rocking and rolling is silver. Let's just go quickly at silver. As usual, we'll start on our monthly. We did take out, and we got close enough when we took it out now, that September high of 2011, that's 14 years ago, exactly 14 years ago in the month of September, we topped out at 43.5. We're back in September at 43.5. We believe that August high of 44.275 is in jeopardy. We think that's going to get taken out. The silver market has been really the winner. There have been two markets that have really been ripping and are the best performing markets right now this year. One of them being silver, the other one being coffee. We'll get to coffee last, but silver, let's go back to the daily quickly. Silver, clean breakout, retested a breakout, and go. So we believe, like we said, we think that 44.275 is probably going to get taken out. We may get to 45, and then we'll see what happens. But for right now, the path of least resistance is up in silver. There is no reason to not be long this name. There's a lot of momentum here. The market is looking great. So really, if you're looking for places to be outside of stocks and stock indices, your best place right now from a trading perspective is metals. Gold, silver, we'll get to platinum in a second, but gold and silver are really 1 and 2. Hands down by far. Let's look quickly at copper and then we'll get to platinum and then we'll wrap up with coffee. Okay, in copper, I've highlighted this zone. This July 31st zone was a range that was keeping copper pretty much compressed. We've fallen back into it, so to a large extent, the market it's trying to get out of it, but it's not having a lot of success. Copper gets exciting if we take out these highs. This is where copper gets exciting. Once we get out of this 4.726 area, that's when copper gets exciting. For right now, copper is still cooking. So you need to be able to take a step back and look at it objectively and say, in relation to that July 31st day, where are we? Right now, we're still trapped in it. Until we get out of it, there's not a lot of momentum here to push this sucker. So because of that reason, you need to, one, size down, or two, wait and be patient. Let it finish cooking. Once it's ready to go, you'll see that it's ready to go. You have spots that you could look at. On the long side, 72.60, that probably sends it. On the short side of where this thing could go, you know, you've got spot number one over here at around 235, and then obviously you got that July 31st low. So for right now, copper is not as compelling from a momentum standpoint as gold and silver are. Okay, let's go quickly to platinum and then we'll wrap up with coffee. Right now, again, platinum is a little bit in a holding pattern. I wouldn't read too much into it because we're getting ready to roll soon. So therefore, that could be keeping a little bit of a lid on prices. Right now, obviously, October is trading 1460 spot one. The next contract is January. Is going to be January, and that's trading at 1431.80. So that's the next contract. So for that, I would just wait for the roll. For right now, I would literally just be waiting for the roll in platinum. There's not much to do here. Again, gold, silver, that's really your money. Outside of that, not really much else to do here. Let's go looking at coffee. Coffee was very interesting. Okay, coffee. You see this bar? This one bar on September 17th was the third largest single day drop this century in coffee. Let that sink in a minute. So coffee right now has an insane amount of volatility. So if you have ICE and you want to know, or ICE data, where you should be from a trading perspective for volatility, coffee is the man, so to speak. Coffee market's been fantastic to trade. It's been fantastic on the long side. You're getting opportunities now on the short side. It's a very two-sided market. There's a lot of volatility here. It's from a trading perspective, it's a trader's dream right now in coffee, really. Market is very tradable. It's very easy to get direction in it because once it goes like every other commodity. Once they go, they just go. So you can see it over here. When coffee decided to make its leg up, it just went. It just went. It topped out, kind of had yourself a little bit of a, red dog reversal over here, RDR, 80-20 trade, whatever you want to call it. And then, wham. Look at that move. Wow. We got to our target. Our first target area was 420. We got there and then basically got rejected, got slammed right back down to 366. These are not 820 and 8 and 21 day moving averages. They're a totally different type of moving average. They're not EMAs. They're a simple moving average, but it's a different calculation. So we're not going to get into that. They're also not 8 and 21 day moving averages. They're completely different. So don't look at it from that perspective because that's not what they are. Commodities, we use something else. So let's leave that aside. However, the market pretty much held this support area. Let's just say support 2 or support 1 over here, I guess if you want to call it that way. Probably this is support 3, which is 366.5, roughly 365. There's a lot of volatility here. There's a lot to do here. So really, coming into this coming week, the places you should be in commodity land at a minimum for volatility, and this is where you really get paid, is you want to be looking at gold, silver, Coffee. Natural gas is a little bit more range bound, but you can make some money there. There is volatility in it. For right now, crude is pretty much dead money, and copper, you got to wait for the range to get resolved. That's pretty much where you should be. Thanks for watching, and we'll see you in the next one.